Wednesday, October 23rd, 2024, Maneco 64, home of alternative economics and contrarian views. Today, we're going to look at the Dow-Gold ratio. I think it's pointing to some short-term trouble for the general stock market. I've been following the Dow-Gold ratio for the last month or so because we were testing some key support around 16, and now we've broken support, and we're actually at 45-month lows on the Dow-Gold ratio. And what does the Dow-Gold ratio mean? Well, it's how many ounces of gold you need to buy one Dow Jones Industrial Average. And I have spoken about this before, and there are some giants of the gold market, unlike me, of course, that actually predict as well a one-to-one ratio eventually. That, in my view, will happen, but not this week, not next week, not next month. It's going to take a few more years. And what will that signify? Well, that will signify the reset of the financial system from paper assets to hard assets. It will mean, in my opinion, the bottom of the credit cycle. It will mean that from that level of one-to-one, things will start to pick up again for the markets, for the economy. But we still have a long way to go for that. It has happened before in the past, back in 1980 and also 1932. Before we quickly look at the charts of the Dow-Gold ratio, and I'm going to compare it to 1987, just want to give a shout out to my precious metals affiliate in the US, Miles Franklin. They've got some specials this week, a $10 Liberty Gold Eagle at only $24.99, over half of the spot price. And it's around 2% over spot, really. It's a pretty good deal, I would say. And they've also got 1 ounce silver Australian kangaroo coin, $2.99 over spot. So you can get in touch with Miles Franklin via email, info@milesfranklin.com, and you can mention Mario or Maneco 64, or you can call them on 1-800-822-8080. So back to the Dow-Gold ratio. Yes, it's something I've been following for a long time and talking about here on the channel. I've noted that it topped, of course, above 40 back in 1999 when we had the dot-com bubble. And we had gold also bottoming around $250 an ounce. And ever since then, of course, gold has actually outperformed the Dow Jones Industrial Average. It's outperformed the S&P. And right now, this Dow-Gold ratio is around, it's around 15.6. Yes, back in 2011, we dropped to around 6. And then it has rebounded. I think it's a counter trend rally, of course, in the longer term, in the longer scheme of things. As I said, I still think we're going down to one-to-one. And as I said earlier, I've been following the Dow-Gold ratio for the last month or so, and I've probably spoken about it on some of my videos of recent. You might remember. And I said that we're testing this 16 level and that it looked like there was a lot of support there. But as you can see now from this chart, it's starting to keel over, and we've actually broken this support around 16. There was some support around 1576 from earlier this year, around April time. And yes, we are at the lowest level since January 2021. And that's about 45 months. So I think this could spell trouble for the stock market, and we could see a short-term drop here in this ratio, quite accelerated. Where could it go? Well, we could go down to 12 and a half or 12, as you can see here, back during the 2020 crisis in March, the repo crisis. We dropped down to 12. And that was even when gold actually dropped, I think from 1750 to 1450. It's just that gold didn't drop as much as the stock market. So it's an interesting situation. And this, of course, is not certain, and I'm not giving you financial advice. So, yeah, I think we could see some shaky next few weeks for the stock market in the run up to the presidential election. What about the miners? I expect the miners to continue to do quite well, and because I think gold is looking very positive, and I don't expect gold to drop that far as it dropped in 2020. I think gold might actually stay up or even continue to go higher as the stock market might correct. And I'm not saying we're going to have a 1987 style crash. All I'm saying, we could have a fairly sharp correction. And talking about 1987, I wanted to show you the Dow Gold ratio during that period. As you can see here, the Dow had made an all-time high in the summer, and it showed because the Dow Gold ratio was at a high there. And then starting in the week of the 5th of October, it started dropping, the Dow Gold ratio. And then on the week of the 12th of October, which is the red bar there before you see the big gap, that's when the Dow started dropping. And then it culminated, of course, on Black Monday, October 19th, when we saw a huge 500-point drop. At the time, it was huge. It was over 20%. And you can see that the Dow Gold ratio dropped all the way to around 3.5 from a high of, almost 6 in the summer. So what happened in October 1987? We can do a little bit of history here, market history. And I'm going to reference Wikipedia. It says background. During a strong 5-year bull market, the Dow Jones Industrial Average rose from 776 in August 1982 to a peak of 2,722 in August 1987. The same bullish trend propelled market indices around the world over this period, as the 19 largest enjoyed an average of 296%. On the morning of Wednesday, October 14th, so that's that week of October 12th, 1987, the United States House Committee on Ways and Means introduced a bill to reduce the tax benefits associated with financing mergers and leverage buyouts. Unexpectedly high trade deficit figures announced on October 14th by the U.S. Department of Commerce had a further negative impact on the value of the U.S. dollar, while pushing interest rates upward and stock prices downward. While the dollar has remained quite relatively strong versus the fiat currencies right now, but we have seen interest rates since September 18th, when the Fed cut the Fed funds rate by 50 basis points. We've seen interest rates, especially in the 10-year or even the 2-year, they've gone up substantially. So right now, as we speak here, the 10-year is at 423. It's even higher than yesterday morning. When the Fed cut rates, it was at 360. So we've gone up a lot, and that's a bad sign. The 2-year is the same story. We were at 3.5% back on September 18th or thereabouts, and now we're at 405. So that's quite similar to what happened back in 1987. Of course, the dollar is a little different, but the dollar is very weak against the currency of kings, i.e. gold. So it just goes through what the Dow did on the run up to Black Monday. And Black Monday, of course, was the big day. Black Monday, the Dow dropped 508 points, or 22.6%, October 19th. Yeah, it's the largest one-day drop by percentage in the index's history, and it still is. Of course, 500 points nowadays is not much in terms of percentage, but am I saying we're going to have a 20% crash in the Dow? No, I'm not saying that, even though anything's possible. But I think the Dow gold ratio is pointing to some trouble ahead. The rise in interest rates that we're seeing, despite the fact that the Fed cut the short-term rates, the policy rates, and the Fed funds target is worrying. And we've just seen another very reputable and famous hedge fund manager, aside from Druckenmiller, and his name is Paul Tudor Jones. He's come out and said that all roads now are leading to inflation, that he's got gold, he's got Bitcoin as well, that's his business, but he also sees treasuries, long-term treasuries. He doesn't like them either. How could you when all roads lead to inflation? And why did he say that? Well, it's what I've been telling you all these years, that the only way to manage a huge debt load is to inflate it away. And that's what the governments do. The only question we have here is whether they could lose control of inflating it away. And how would that happen? Well, it would be psychological. The public and investors would twig onto it and try to jump off financial assets. And that would mean kind of a crack up boom or hyperinflation. I think Mr. Tudor Jones doesn't see that. He sees them succeeding fairly well in inflating the debt away, and I'm not too sure about that. But anyway, that's what's going on. And one of the things I wanted to show you, though, about the Dow Gold ratio in the present day is that if you look at, let's have a look here where we are. Yeah, if you look at the recent high, and by recent I mean in the last, let's say, 8 years or so, we had a high back in October 2018. We had a high back in August 2021. So that means the Dow made highs versus gold in those periods. And unlike in 1987, where the Dow made a high in the summer of 87, even versus gold, we're seeing a non-confirmation here, because the Dow made a recent high on October 18th, just above 43,300. But as you can see, the Dow Gold ratio has been going down. So I think that's kind of a non-confirmation, and it's a bad sign. So yeah, this chart here of the Dow going back to 2015, you can see that little circle I put around there. That's when the Dow made its most recent high versus gold. And despite that, the Dow has kept going up, but gold has gone up even faster, and I think that's a bad sign. Anyway, just a quick update on the BRICS summit. It started yesterday, and it was mostly ceremonial. President Putin was welcoming all the foreign dignitaries to Kazan. It's actually in Tatarstan. It looks like a beautiful city, actually. Yeah, so it's mostly ceremony, meeting people, welcoming them. And I think the real nitty gritty is happening today and tomorrow. So I'll cover it more deeply in the next few days. But one interesting article that came out on Bloomberg from Canada, BNN Bloomberg, is this. Putin hosts BRICS leaders, showing he is far from isolated. And I think that's a problem for the West because that goes against all their narrative of how Russia is isolated, that they're losing the war against Ukraine and that the world is against them. So I just wanted to put that out there. With that, let's quickly look at where the markets are this morning. So it's 10 to 9 a.m. London time. I saw the news about McDonald's. Big coincidence, isn't it, that President Trump has a great, great clip there at McDonald's, cooking the French fries and delivering it through the drive-through. His ratings go through the roof, and lo and behold, the CDC says that they're to blame for some kind of E. coli event. I think McDonald's stock dropped like 10% last night after the close, and I think it's impacting the Dow a little bit here. The Dow is down about 130 points. It's not that much. NASDAQ is down 30. That's the futures, of course, and the S&P is down 3.5. What about gold and silver? What are they doing? Well, gold right now is up $6 at 27.55, so right near the highs. I think is that the all-time high? We're getting so many all-time highs every day that you kind of forget. Yeah, it's another all-time high here in gold. So that Dow gold ratio is getting even worse for the Dow, of course. Silver, I think the spot price got within a few cents of 35. The futures, the December futures, traded at 35. Right now we're at 34.70. We're down 16 cents. The high's been 34.89 and the low 34.44. So that's where we are. And as I said earlier, it looks like the Treasury market is not behaving very well. Yields are back up slightly this morning. The 10-year did drop during the day yesterday, but now it's back to, it made a new recent high overnight at 424. What about the currencies, the fiat currencies? Well, the pound's down slightly and so is the euro. And the dollar continues to rally quite strongly versus the yen. We're back above 152 after trading down as much as 140 this summer. And why is this reversed? Well, because the new prime minister in Japan and the central bank, they've backtracked. They're gonna raise rates, but now they're saying they will not. So it's really tough for Japan to continue to raise rates when the whole world is stimulating, not just monetarily, but fiscally, like in China. Don't forget, the BOJ is still doing about $40 billion in QE every month, not yen, dollars. Well, the equivalent amount in dollars, they're doing it in yen, of course. I'm just giving you the idea of how much it is. And we're also seeing crude oil trade back up. The last few days we're below 70. Right now we're at 71.20. Yes, it's down $0.50, but it's back above 70. So there you go. With that, I'm going to wish you all a very good day. Take care. Bye.